Hello and welcome to 11FS Fintech Insider Spotlight, this week in partnership with Salv. I'm David Barton-Grimley, Fintech Strategy Director right here at 11FS. In this show, we shine a spotlight on the best and the brightest in the tech and financial services industry to get to know them, their businesses, and what they think the future of the industry will look like. So on today's Spotlight, I'm delighted to be joined by Taavi Tamkivi, founder and CEO of Salv. So Taavi, how are you doing today?
Hello, I'm really happy to be here and I'm really impressed by the weather that you have here, like full sun.
Yes, finally. It's great to have you today and let's get into it. So to start off with, I'd love to know the story behind Salv. You worked at Skype and then Wise on fraud and compliance. So yeah, what made you start it?
Yeah, interestingly, my work-wise, my history has been always about crime fighting, financial crime fighting. I used to stop fraud at Skype and I used to stop money laundering, terrorist financing at Wise. And as I'm a data nerd, data scientist, as they say nowadays, I've been using data technologies and also smart people around me to fight financial crime. But at some stage I realized that actually when I'm doing this crime fighting work in one single company, then my impact is very limited. Although these companies were huge, then actually it was still focusing on one particular company. And I learned that there's so much bad things happening around me, which I could also influence much more if I would found my own company, my own product. I would put in my knowledge, but also my best, smartest colleagues and friends' knowledge into these products, so I can help the whole industry, not only single companies. So that's why I founded Salv, to make a world safer place and to beat financial crime.
I've heard you talk in the past about collaborative investigations as a way of sort of boosting accountability and closing some of these gaps that you're talking about. Yeah, how does that work?
That was a really interesting story because when I started, right after I started my company, I had few customers like fintechs and some banks, and they started to give me hints that they do see some criminal activity coming from other institutions and specific names, specific people or specific transactions that looked really highly suspicious, which were coming from their neighbor institutions. But they said that they cannot inform or ask additional questions from these other institutions that they saw where the fraud or money laundering suspicion came from. And it started to bother me, like why they don't speak with each other.
Yeah.
And like why, and I learned that it was wasn't regulated back then. There wasn't proper technology, there wasn't proper procedures, there wasn't proper community approach to that. And that this learning packaged nicely, huge opportunity that now 5 years later we see that the whole market is evolving towards to collaborative crime fighting, intelligence sharing technologies, joint case investigations. But 5 years ago it was just some fuzzy hints coming from people that come on, I would like to know more about these specific cases, but it was very hard to formulate back then.
That's so interesting. And 5 years ago is really not that long ago at all. With banks not cooperating against something that I suppose is quite important, right? And to what extent would you see, the perpetrators of crime or fraudsters, for example, exploiting this lack of communication between banks? Because I'm sure that's the kind of natural way, is to figure out how are they not talking to each other and where can we find that exploit?
That's actually really interesting. I really would like to do some wider research or academic research around it. I think one of the focus areas is this APP fraud or authorized push payment fraud, which is happening largely due to the fact that the industry institutions are not collaborating. And I'm not saying about banks, but it's about telcos and social media companies and banks and the fintechs. These groups don't interact with each other on an operational basis. And that's something where criminals, fraudsters really are getting their benefit out. And that's a new type of the fraud in terms that if you think about old days, then people went to bank and dropped cash and then ran away. So it was one institution against the other institution. There wasn't that much of the network abuse that we see now in this modern environment where the criminals are super skilled in building combinations of institutions together while knowing that these institutions are not able to work together with each other. So it's exponentially unfair competition, actually, a fight going on between these two.
That's so fascinating. And is there, you mentioned how difficult it is for a bank or a financial institution to get on top of its own data as being one of the main reasons maybe why it's difficult to do cooperation between institutions. Are there other reasons? Is it a regulatory reason? I can't share my data with another institution because I'm not allowed to, or I perceive that I'm not allowed to?
I think it's like a similar challenge that we see with every new category which is created in the market. It's like there are some early adopters, some organizations or some people who are willing to take a bit more risk or are willing to do something which is not yet mandatory. It's like allowed, but not yet like in the masses. And it takes time actually for these early adopters to get used to it, and then the followers to come after them. And now I'm really confident that in our industry, in the crime fighting industry, in the financial sector, there is like this new categories being defined and executed right now. And that's why it's so exciting to be here. And like there's like legislation is changing definitely. GDPR is becoming more clear. It was like changed already some years ago, but now it's becoming more clear. And people like myself, we do see the huge value that this well-organized legal basis around the privacy information, how it helps the industry. There's technology itself, which is developing like a new encryption technologies, privacy enhancing technologies. There is communities, communities are forming between the people from the banks and fintechs and crypto spaces, where people would like to work more and more together with each other, would like to exchange their experiences, and that's actually forming as well. And on the senior management level as well, on the C-level, people do understand that if they're not doing extra steps, like in addition to what's definitely mandatory, then actually their own destiny and their own career is under huge risk. That's what we see like in most of the massive money laundering scandals which are happening around us, is that the CEOs and C-level people in the banks, they're actually, once they fail, they're being pushed out of the market. And that's the reason why smarter of these people are taking extra steps to move ahead with the new technologies, and the collaborative crime fighting is definitely one of these dimensions.
And fraud has been growing so exponentially. I guess if you don't start to find other ways to collaborate, you're just not going to be able to keep on top of it. It'd be good to talk about the difference between data and intelligence sharing definitionally for our audience, if you can lay that out.
Yes, as I'm a mathematician, I love to agree on definitions first. If people talk, and why it's important also is if mixing up data versus intelligence sharing or exchange, it confuses people and makes them to worry more than it's worth of. So data sharing is something you can imagine that you have database or Excel full of data about personal details and transactions and everything. And you take this whole spreadsheet and send it over to the other counterparty in the encrypted format or in the email. And this other counterparty can see all this data which is visible for them, which is one thing. And it is super touchy topic to do, right? The second part is actually information, what's the knowledge that you're getting out from this data. Is someone has analyzed it already, has created pivot tables or graphs, or some kind of knowledge is being dragged out, and they're sharing this knowledge or learnings with the other counterparty, which is being derived from this data. But the third, which I'm actually talking about, is actually intelligence, the core, really valuable new knowledge which is being digged out, and conclusions. If I have this graphs or pivot tables, that's great information, but someone as an intelligent person looks at this and says that, okay, here is the problem. That's the month, or that's the customer that we really need to focus on. And that's the customer that they need to ask more information from the counterparty, or I need to send a red flag with this customer's face on it in the encrypted format, this customer face on it to the other counterparty. So that's the intelligence part. And that's what crime fighting industry is missing the most based on our experience.
And that's the hard bit, right? And that's where you guys come in, because all of, assembling the data into insights and then actionable intelligence is an extremely difficult thing to do. But if you're taking or abstracting that complexity away and saying, here is the simple insight that we need to focus on, and use that then to collaborate across institutions and organizations to solve the crime.
Exactly, and that's also this kind of three-level definition can be also used when you're looking at different initiatives which are happening in the market and how these separate from each other. So there are some really good data sharing initiatives also happening, where the list of the highly suspicious IPs or customer names or account numbers is put into the one list, and this list, or access to this list is provided to the other institutions across the industry. So that's like a classical data sharing exercise, which is also useful at some sense. Like we are not operating in that space.
Right.
We're operating in the other angle, which is like about intelligence sharing, which is about like someone in a specific organization has done already hard work. They have used their own internal monitoring systems to come up with a red flag with a highly suspicious customer. They have raised internal case or investigation case around this customer. And based on this intelligent investigations, they are actually determining that, okay, I want to inform this specific other institution about this specific customer, and I want to ask these questions from them. And the other counterpart institution who is part of the network actually can get this request, can respond, can do their internal analysis. Maybe they find new things about this specific entity or customer. They can stop the account or claim back the funds or whatever. But also they are reporting this intelligence back to the as a part of the intelligence sharing or collaboration network to their original bank as well. So that's like the joint case management that we're talking about, which is not the same and not competing with data sharing, and they're all needed in the market.
Yeah.
But the data sharing, it has been there for a while already, which is good. But the intelligence sharing and joint case management, that's actually a growing area, fast-growing area right now.
That's amazing. And so you're taking the kind of best latest practices in data and intelligence. How does it work? And what are some of the examples that you can show?
I think one really great learnings that people in the tech sector in general and fintech sector in general are gaining, and maybe they're underestimating, is that how much power and control they have over their data and their customers' data. They have like databases, they can run SQL queries with their manual hands or like using AI tools. They can build up real-time controls. They have full visibility. But like big part of the financial sector, wider sector, doesn't have this luxury to see and to control the data, hardcore data that they have in-house. Although we have been hearing about the data is the modern gold and stuff like for a long time, then actually when zooming into the financially regulated institutions, then there are like very small portion of them who can actually run any operations using their data smartly. And especially in the financial crime side of things, it's like very limited access to data. And when I started working with the first banks, like real banks, before even I started my own company, I was so shocked and so surprised like how valuable data they had in-house, but no one was actually using it, and no one was controlling it. And that was like comparing, like day and night comparing to the classical fintechs where you have all the luxury in your table actually.
So in the UK, as of the 7th of October 2024, it will become mandatory for banks to refund fraud victims up to £85,000 within 5 days. Do you see that as also being impetus for the whole industry now to start sharing data and intelligence better?
Short answer is yes. The longer answer is that if you think about fraud fighting, then first of all, we're expecting that companies are putting more effort into prevention, like how to prevent, like informing the customers and educating them and setting up the preventative controls. Prevention gets better. Then also detection of this APP fraud needs to get better, that my customer has already sent funds to the other institution, which is like controlled by the money mule. Detection needs also better tools, better people, better processes. But the third component is like collaboration or like intelligence sharing between the entities in order to increase the likelihood of funds recovery for themselves. That's something which has been maybe underestimated. And that's the third discipline will help banks and fintechs to cut their own costs, because like if they need to pay back the money to their victims anyway, right? So that's the cost for them. Yeah. But this cost turns into loss if they're not able to recover the funds for themselves. And this recovery depends heavily on how effectively, how fast, how accurately they can exchange knowledge or intelligence between themselves about the stolen credentials to stop them, suspend the accounts, and send it back to the original source. And this kind of like financial recovery for the banks and fintechs themselves is something which is key and which is coming out from the better collaboration part.
Yeah, and that comes down to, rewarding customer satisfaction and retention. I mean, it's a huge problem for customers, and they're calling the contact center. There's a cost there as well. So the banks have incentives to cut these costs.
That's true, but it's like very important to distinguish that customer satisfaction depends on the speed and quality of their mandatory reimbursement, like that they're getting their money back. But the other part, which is like not touching the customers but touching the banks themselves, is that if they are able to recover their losses, like they're paying the customer anyway, right? The money is gone. But if they can get the money back from the criminals to compensate their own losses, right? And that's the key part, which CFOs and like from the internal loss management will deal with. So these are both important dimensions.
Yeah.
And in the public media, of course, it's talked a lot about customer impact and satisfaction and all of that. That needs to be there. But what I'm talking is about like minimizing the losses for the financial institutions themselves.
Yeah, that's huge.
And that's where the crime fighting collaboratively comes into play, actually.
So fascinating. Listening to you talk, it feels like there's this almost constant cat and mouse game, right? The regulation that's come in is a good thing, as you say. It makes more people accountable. How are these criminals able to stay so constantly far ahead? Because the technology landscape is evolving really, really rapidly. They are obviously also right on top of that. Is it just a game of out-teching the banks constantly? How do you see this in the next, say, 5 years, for example, evolving?
It's interesting that you said cat and mouse. Like I'm thinking like who is cat and who is mouse in this game. And like for me, it feels more like criminals are like a tiger and financial industry is like a little small mouse. Because like it's as I said also before, it's like exponentially unequal competition. Because like financial institutions and other related telcos, they're not working together too often. But actually, from the criminal side of things, is like people keep talking about AI and modern technologies, how the scam fraud is happening. But for me, actually, the biggest lever, biggest strength that criminals are using is that they're super early adopters in terms of new financial technologies. And they combine different tools or pieces of these technologies together super well, way better than any of the innovative, like good people actually are doing, or good companies. So if you think about over the last 10 years, 5 years, the amount of new solutions in the financial markets, like they're like Lego pieces. Like you have banking as a service providers, and you have crypto companies, and you have e-wallets, and you have instant payments, and utility financial services, and so on and so on and so on. And these are like a really nice. This is like a really nice box of the Lego pieces that criminals are putting together, combining constantly over and over again, and the flows of like stolen proceeds are moving through these pieces, and they do know that these pieces are not interacting with each other directly. And that's actually what's like after you understand that, then it's like actually possible to start discussing, okay, what are the countermeasures, like how to break this Lego into pieces again, or like how these pieces actually can combine together. And that's like the tiger versus mouse approach right now.
Constantly breaking and then reassembling all of the different pieces. Exactly. You mentioned all sorts of different types of tech in there. I mean, is there one thing that stands out? Everybody talks about AI and generative AI as being a big threat. Is that true, would you say? Or
it's like of course it's a threat, but I wouldn't say it's a dominant thing. A dominant thing is still that, especially in this authorized push payment fraud, they are attacking like legit people, right? And attacking with the social content attacks. Of course, you can use AI to generate messages and like translation of the text into any language and like visuals. That's super good and it's getting better. But that's not the main reason still. The point is that they know super well that, okay, if your money is sitting in your bank, and if you're voluntarily sending the money, like let's say that if they're targeting 1,000 people, then maybe 2%, which like 20 of them are sending the money away. So and they're trying to get it up to the 30%, 3% maybe, but that's enough for them actually. And with AI, they can get it up to 3% maybe.
Right.
But actually, the point is that they are also super skillful using the other fintechs who are in the market, where the money mules or like students are like voluntarily opening virtually their bank accounts. So again, or their virtual accounts are being opened. That's another feature that market enjoys, whole market enjoys, that you can open bank with a fintech without going into the office.
Yeah.
That's also what criminals are enjoying. And once these money mules accounts are open, I call them like honeypot companies or money mule honeypot companies. It's not hundreds of them, there are like maybe 10, 20 of them, these kind of honeypot companies. And through those honeypot companies, the stolen credentials are flowing into the crypto space or into cash or into some other assets. And that's like, as a logical thing, it's like pretty simple, but it works super well for them.
Yeah. Once you land into that honeypot, or once you've created it, that is then your landing post to expand into deeper into the financial services ecosystem. I love the kind of analogy that you had with, crime almost being a tiger and the banks almost being kind of like little mice, which is in some ways counterintuitive to the way that people see financial institutions. But I think there's something very interesting there, right? Because so far we've just been talking about one particular type of fraud, but I guess the kind of stuff that you guys are exposed to is an almost much bigger and in some ways even darker world. I'd love to hear more about the bigger picture.
Yes, like if I'm thinking about the numbers and the impact, then APP fraud, of course, it's very traumatic for the people who are getting hit by that. And like politically, it's super hot topic right now and regulations-wise as well. I don't argue with that. But if I'm looking at the like overall estimated amount of money laundering which is happening in the world, then the APP fraud is maybe 1% of that, or a couple of percent of that.
Wow.
But actually, the big part is still about terrorism financing, drug trafficking, funding the war, making money from the war, Russian war in Ukraine. Some people are becoming really, really rich because of that. Human trafficking between Africa and Europe or whatever continents. And that's where the big money is. So the criminals are not waking up every day thinking about how to commit APP fraud. That's niche market for them. For some people, it's big market, but the overall space. But and my worry and my call to the industry is that yes, let's deal with APP fraud and let's resolve it. But please don't forget that actually the big problem is still big and hairy problem is like way more bigger than APP fraud stuff, and like we need to keep fighting against all different types of the financial crime, not only this one thing, I think.
Gosh, it's terrifying. So what are the methods that Salv utilizes to, help with intelligence sharing? I mean, how does it actually work?
Just to take a step back, as I said in the beginning, it's like first thing I learned was that organizations are usually not very good in using their own internal data.
Yeah.
So that's why we built like rule engines, which allow them to process huge amounts of transactional or customer data in-house to run the classical like AML duties, the transaction monitoring and sanction screening and risk assessment, all of that. But it's based on the highly scalable rule engines, which are controllable by the AML people and fraud people in-house. So that's the step one, right? You need to have your own data house in order before you can actually start providing any intelligence externally. The second part is that actually we realized that exchanging huge amount of data, it sounds fancy, cool, but actually it doesn't help anyone because data is all over around us, and it's really difficult to draw out any intelligence from this data if you don't have a content. So what we started with, startup-wise, very small in terms of targeting 2 institutions and getting them to exchange one message, back and forth, about specific criminal transaction or about specific high-risk customer, and both of them confirming that yes, we got some benefit out from that. Either we found a new threat or we were maybe able to resolve the false positive case. So basically, start small and focus on the high-quality intelligence that can be exchanged between the two parties, because it's also legally way more easier to explain.
Yes.
This legal basis is that I'm protecting us against the financial crime. Technically, it determines that you don't need to exchange huge amounts of data, but you need to exchange in very well encrypted pieces of information back and forth. And then the benefit-wise as well, it's the value that comes out from this kind of case-by-case collaborative investigations is very evident for both parties. And thanks to this approach, financial institutions who are using this kind of collaborative case management, they're reporting back that their accuracy rate or true positive hit rate is about 80%.
Wow.
Thanks to the fact that both parties trust each other. There is community work going on the background, and they're focusing not on the masses of data, but actually low volume but high quality of information pieces and intelligence that's being exchanged.
That's fascinating. So it's not about creating a massive data lake, it's about sharing very specific threats and figuring that out. So far, I suppose we're talking about one country, we're talking about the UK. How does this work when you expand this across jurisdictions and across geographies? Because then you have some serious regulatory kind of issues. Are you seeing that happen more internationally?
It's first of all, for me, my home market is Europe and including UK, because Europe, in one hand, it's like the most advanced in terms of the GDPR and like data protection rights, because also of the compliance spend. Like I think there has been analysis which shows that 2/3 of the global compliance spendings are happening in Europe.
Wow,
which is like incredibly high, and also like other regions, other countries are looking up to Europe, like what's happening here, right? And that's why it's like really huge home market where to build things and try out the new things, because it's like innovation-wise as well, really good. Of course, like there is like each country inside of like Europe, including UK, they are trying to reinvent the wheel actually quite often, and like it's good because like they're in the sense that they're not waiting for each other to do something, but actually I've seen in Lithuania there's like legislation changed. In Switzerland there are discussions going on like how to stop using data exchange. In UK here of course as well. So like many different more innovative countries are actually dealing with this already from their end. But naturally there are some risks. Like if each country develops their own protocols and their own standards, then it's like might be very hard to exchange information intelligence across the borders. So just imagine the GSM network, mobile network, which works in very specific every country, but you cannot do the roaming like international calls.
Yeah.
So that's the risk that we're trying to prevent, is that agreeing with the industry, agreeing like sort of standards which would enable different communities to work with each other. And also like it's I've seen the ambition by the banking community to do their own thing, and then the fintechs want to do their own thing, and they yet don't think about that actually we should do it together. And again, but as I've launched these networks in several countries already, I see that within half a year, within 1 year actually, there is a growing interest to speak between these communities, like with the banks and fintechs and the cryptos across the border. And now the cross-border intelligence sharing, which is like cross-border itself is like often used term, but actually it's not, shouldn't be taken as a showstopper. It's that because crime is happening across the borders. So the intelligence has to be moved across the borders as well. And we see more and more these kind of honeypot companies which are connecting with the banks already across the borders, because these banks are reporting suspicious cases to them and vice versa as well. So it's moving in the right direction, but it's like we're trying to be really cautious and deliver the message to the financial sector in the wider spectrum, is that like don't wait others to do other segments to do anything, but also don't ignore what they're doing and think through like how in 2 years' time how you can actually work together with them.
So let's bring it back to Salv and the things that you do. So how do you actually promote a more proactive approach to intelligence sharing?
Well, first of all, our mission at Salv is to beat financial crime. And how we do that is like we're providing better tools and technologies to the financial institutions who have people who are fighting actively against the financial crime, right? So we need to give them better weapons against crime. And it starts with internal controls. It starts with like more accurate sanction screening products that they can control themselves. Not us, but actually they can set their thresholds, they can minimize the false positives. So we're giving them also transaction monitoring products, which also enable them to chase the specific crime scenarios, to minimize the false positives, to increase the accuracy, to control it fully, to take the responsibility for their own destiny. Once this is sorted out, then they have proof that they can control their internal data. They can get highly accurate alerts, cases, which they're able to identify, and then they have solid basis for involving other institutions around them into these cases. And that's where the intelligence sharing comes into place. Like I can only report like highly accurate information to other institutions without destroying them with overloaded high volumes, right? And that actually gets back to this being able to find more crime with higher accuracy.
Okay, and on that note, we're coming to the end of the show. Thanks to Taavi for joining me today. Where can people find out more about you and everything you're getting up to?
From our homepage, salv.com, which is, I keep coming to different events to speak about intelligence sharing which is a really, really hot topic. I must say that it's being discussed more than the AI in the financial crime space, crime fighting space. That intelligence sharing is way more important than the AI on the stages at least. And you can come and see me there as well. Thank you.
Great to have you, Taavi. Right, that's all we have time for this week. Make sure you follow 11FS on LinkedIn, Twitter, and Instagram and TikTok to stay updated with all the cool stuff we're doing. And if you enjoy our show, do subscribe to the 11FS YouTube channel, where you can also catch up on previous episodes. Have a great week, everyone, and goodbye.